Robinhood is to pay $70 million fine after causing widespread and significant harm to customers. So let's get right into it. So the popular investing platform Robinhood has agreed to pay nearly $70 million to the Financial Industry Regulatory Authority, FINRA, to settle allegations that the brokerage caused customers widespread and significant harm on multiple different fronts over the past few years. That is the largest financial penalty ever ordered by the organization, a non-government entity authorized by Congress to oversee hundreds of thousands of brokers across the U.S. Specifically, FINRA's investigation found that millions of customers received false or misleading information from Robinhood on a variety of issues, including how much money customers had in their accounts, whether they could place trades on margin, and more. So the inaccurate information cost customers more than $7 million, FINRA found, and Robinhood is required to pay restitution to affected users. Now, other allegations addressed in the settlement include that Robinhood approved risky options trades for thousands of users when it should not have and did not do enough to prevent system outages in March 2020 that adversely affected millions of users. Now, this specific situation, I believe, this caused a lot of people to lose a lot of money, because they were completely locked out and were basically screwed, and a lot of them had trades within that system, and it just completely crashed. So Robinhood has invested in improving the platform and is building out its customer service team, and Robinhood spokesperson Jacqueline Ortiz Ramsey writes to CNBC Make It in an emailed statement about the settlement. "We are glad to put this matter behind us and look forward to continuing to focus on our customers and democratizing finance for all," she says. But falling short, Robinhood was launched in 2014 and attracted millions of customers, many of them first-time investors, with its easy-to-use app and industry-changing commission-free trades. Now, I believe they were actually the first ones to really do this at scale, but it has come under fire multiple times in the past few years, most recently during the GameStop rally earlier this year when it restricted trading. And FINRA's investigation found that Robinhood's customer service issues go back much further. Between 2018 and 2020, for example, Robinhood failed to report tens of thousands of customer complaints to FINRA that it was required to report, the organization says. FINRA also alleges that Robinhood has negligently communicated false and misleading information at different times since September 2016, and those misleading and false statements had hurt customers financially, FINRA found. And the report also referenced the tragic story of a customer with details matching that of 20-year-old Alex Kearns, an investor who died by suicide in June 2020 after Robinhood showed a negative cash balance of $720,000 in his account. FINRA found that his balance was inaccurate and that the value of his position was half of what the account displayed. While Robinhood has offered options trading since December 2017, FINRA says it has failed to exercise due diligence before approving customers to place options trades, relying on algorithms rather than people to approve customers for the risky investing move. And as a result, Robinhood approved thousands of customers for options trading who either did not satisfy the firm's eligibility criteria or whose accounts contained red flags indicating that options trading may not have been appropriate for them, FINRA writes. And finally, the company failed to supervise the technology it uses to provide its core services between January 2018 and February 2021, resulting in a series of outages and systems failures. One of these outages occurred on March 2nd and March 3rd, 2020. So during extreme market volatility, FINRA says these outages cost certain individual customers tens of thousands of dollars. Now, Robinhood did not admit nor deny the charges, and it's still under investigation by the SEC. And on Wednesday, the company published a blog post to highlight the changes it has implemented to address customer concerns, which you could kind of just basically say this is kind of bull nonsense. But feel free to give your thoughts on the whole situation if you end up stumbling upon this episode, because no matter how you look at it, what Robinhood did was very dirty, right? Like, no matter how you look at it, what Robinhood did was dirty. And what they did to their own customers is extremely dirty. Like, a company shouldn't screw over their customers, especially to such a degree that they did. Now, I don't think necessarily the problem is with like them offering options to people who may not be experienced in that. I don't think that's the biggest issue. I don't think the biggest issue is the whole free trade stocks thing. That was actually, honestly, a very key point in like the whole financial system, that basically, like, Robinhood basically forced all these other companies to basically offer free stock trades, right? So I think that was probably one of the biggest benefits to Robinhood, right? Other than you potentially getting free stock from Robinhood by going to 40inbox.com and just clicking free stock. But I think that's the biggest benefit from Robinhood, is the rate at which they pushed the whole financial system, all these brokerages, to offer free stock trades. I think that's absolutely amazing. But I think the biggest issue when it comes to Robinhood itself and how it basically damaged their customers is the gamification of Robinhood, right? Like, they basically made buying and selling a stock a game, right? And not just any game, but basically like a lottery ticket, right? For example, if you were to go to 40inbox.com and you were to click, hey, get a free stock, right? And basically, if you never had Robinhood before, if you click that link, you get Robinhood, you link a bank account, and you get a free stock, right? Because you can get a free stock. What they will do is offer you 3 different, basically, free stocks that you could choose from to scratch off, right? So you're literally scratching off a unknown stock for a prize that could be worth a lot of money, right? So just think about that. Think about potentially getting basically a free lottery ticket that could be worth up to $500, right? Like, which these free stocks are worth up to $500. So it's pretty crazy when you really think about it. Or like, basically, let's say that they offer people to buy like a penny stock, right? Like, maybe they offer like a really, really low cost stock, let's say like $1 or less, right? Well, they make it like a game that you could just keep buying it, keep buying it, keep buying it, keep buying it, right? They just gamify it so much to where they don't care whether or not people end up investing money. They only care about people transacting, right? Because you get that dopamine hit whether you buy a stock or you sell a stock. Like, it doesn't matter, right? What you end up doing. They just care about, the transactions, because that's where they really make their money. And so I think the biggest issue when it comes to Robinhood is just the pure gamification of trading stocks, because you should really lean more towards investing long term. But when something's basically turned into a game, that's not what people are going to do. People are going to go more so in like the swing trading, day trading kind of stuff, options trading, maybe do margin as well, try to do some like riskier trades for like the quick, easy money, right? And you got to be really careful with that. And a lot of users really got to be careful with that, because there's a lot of people who are getting involved in investing, but literally know nothing. And I mean nothing. So you have these people just buying random stocks because they're getting that dopamine hit. Like, yeah, I just bought this $100 stock. Oh, wait, it just crashed. I'm going to sell everything that I have. It's like, it's crazy. So just be safe with this. But yeah, it's going to be interesting to see what the future of Robinhood is going to be like. But I believe if they lessen the gamification of it just a small bit, they could have a very, very long term future.